काय झालं सर?
काय नाही मॅडम, काय नाही.
ओके.
Sir, please start.
Sir, yes. Good afternoon, everyone. Today we have.
काय झालं सर?
Hi, madam.
ओके.
Good afternoon, everyone. Today we have CMA, Mrs. Varsha Pense. Varsha Pense will cover the session Cost and Management Accounting and Financial Management. Madam is having 6 years industry experience as well as 22 years teaching. 22 years.
Okay.
Good afternoon, everyone. Today we have CMA, Mrs. Varsha Pense. Varsha Pense will cover the session Cost and Management Accounting and Financial Management. Madam is having 6 years industry experience as well as 22 years. मैडम आप स्विच ऑफ कर दीजिए. Varsha Pense will cover the session. हॅलो.
हॅलो.
मॅडम तो आवाज तुम्ही म्यूट करून ठेवा, अदरवाइज तुम्ही जे बोला ना ते परत रिपीट होणार.
अच्छा, एक मिनिट. हा, हे मी देऊन येते. प्रतिभा,
आवाज म्यूट करून ठेवला तरी चालेल. व्हिडिओ म्यूट करून ठेवा.
आईला देऊन येणार. त्याला म्यूट करायचं. बंद, आवाज बंद करायचा.
मॅडम, यू कॅन स्टार्ट द सेशन नाउ.
ओके, चालू करू?
Yes, madam. Yes, start it. The audience are from different places, like some are from Gujarat and MP. So use our language Hindi or English only.
Okay, sir. First, let me thank Vanzari sir for his kind words and a brief introduction. He has already introduced, so I don't need to introduce myself. So good afternoon, friends. I am Varsha Pense, and today I'll be taking your lecture on cost and management accounting. A very easy, very nice, very interesting topic, right? नको, हे झालं, बंद झालंय. ओके, ठीक आहे. Okay, sorry. So now we have to understand one thing, that this is our crash course or revisionary lectures. What does that mean? We understand that you all have already studied once, and now we are going to brush up all your topics again, right? That is a basic purpose with which we will be going ahead. So first of all, before starting, let me tell you all, some students were asking me, or they were afraid कि मैम ऑनलाइन एग्जाम है तो कैसे होगा, क्या होगा. First question number 1 is so optional, as you all know, always objectives. So no problem. Question number 1 is objectives. But after that we have big practical problems. So how do we go about? How will we get MCQs in big questions? So today I am going to address this problem of few students. I think many students have this issue that practical problems बड़े हैं, उसका MCQ में क्या होगा. So as and when we do the problems, I'll just address this issue for you, so you don't have to worry. Okay. Now, since it is a practical subject, let us have your calculators, your study material, and your notebook handy with you. Just keep this handy, because today we are going to brush up your theory topic, or that is concepts, and application of the concepts, how you use those concepts to solve your problem, right? So all set. So welcome once again to our very easy, very interesting, and very important subject, cost and management accounting. So let us go ahead with our first topic, that is marginal costing. I'll share the screen with you all. Sir, here I'm not able to share. They're saying cancel the spotlight video.
No, ma'am. There is a share screen option at the down. From there, you have to do.
Yes, that I had done and I had shown also before. Yeah, I got it now. Okay. So students, you are able to see the screen?
Yes, ma'am.
You are able to see the screen?
Yes, ma'am. Please continue.
Yes, madam.
Okay. See here, now our first chapter, marginal costing. When we say of marginal costing, what happens? It is a decision making technique, correct? A decision making technique where we bifurcate our cost into fixed and variable cost in order to arrive at decision. Now if you see here in marginal costing, you all know what is fixed cost? Fixed cost is a cost which remains constant irrespective of the volume of output. Variable cost, cost which changes with the volume or with your volume of output. So in your marginal costing, we have our profit statement which is shown as under. From your sales, you will reduce your variable cost. The resultant figure is called as contribution. Then from that you reduce your fixed cost. The resultant figure is called as profit. This is how we show our profit statement. So marginal costing basically is a decision making tool or a technique which helps in decision making to the management by bifurcating your cost into variable cost and fixed cost. Now, when we say marginal costing, our problems are basically of two types. Okay, one is your formula based problems. Marginal costing technique has given us a lot of formulas. Based on that formulas, you will have to calculate the problems. And second type is decision making problems, where you don't have exactly any formula. You see the question, you analyze the situation, and then you go ahead with taking a decision. Right? So let us see all different types. I will do one suggestion to you all students, that don't be busy writing all the formulas and all right now, because all this is already there in the book. And as we said, these are revisionary lectures. So you all have already done this and you all already have this in the book. So if you are in a hurry of writing, you will not understand. Maybe you try to understand better, remember the concepts and brush up your memory. That may be more of help to you. Right? See, now contribution is your formulas. This is how I have given all the formulas which are already there in the text today only for briefing. So that our next problem which we are going to do, I have given the notes already. I think all of you all must have received. Okay. So that notes I have given the questions which we will be solving today. And I'll tell you the difference of your offline exam and now your new online exam. So see here, you have your sales minus variable cost, fixed cost plus profit. Contribution is sales into PV ratio. Your PV ratio. PV ratio is a profitability ratio. It tells you which product is more profitable and so on. The relation between or the effect of changes on profit due to change in sales is what is calculated here. Now, if you see in PV ratio, there are 4-5 formulas. One is PV ratio is contribution by sales. Now, we already saw contribution ka formula. Contribution ka formula is sales minus variable cost. So, this is nothing new to remember. We also saw contribution is fixed cost plus profit. So, fixed cost plus profit by sales. So, ये एक ही हो गया bifurcation. Then when you have 2 years figures given, you can also use these two formulas, change in contribution upon change in sales and change in profit and loss upon change in sales. Now, when we say that this formula, 5 formulas are there, right? We have 5 formulas. So when you have your 5 formulas, what you will be doing? You will be doing all the formulas. ये एक बात एकदम ध्यान रखो, सारे के सारे फॉर्मूले करने हैं. सिर्फ हर एक का एक फॉर्मूला किया छोड़ दिया मत करो, because the problems are such कि you have to see कि कौन से फॉर्मूला फिट होता है, कौन सा फॉर्मूला से हम आगे जाके प्रॉब्लम सॉल्व करते हैं. So there are 5-6 techniques. For each technique, you have 3-4 formulas. Learn all your formulas, which are already there in your study material. Your next is break-even point. Break-even point is no profit, no loss. That means if I sell 500 units, I say my break-even point is 500 units. What does that mean? That if my break-even point is 500 units, at 500 units, I will neither be making a profit nor I will be incurring a loss. That is what is said as break-even point. Okay, I'm getting this students are saying that ma'am, please provide your notes. I have already provided the notes of the questions and all. It's already given to you students. I think have you not received it? Vanzari sir,
Yeah, we have forwarded.
you forwarded, no? Yeah, the notes have already been forwarded, students. This notes, I have given you all the important notes and notes of all questions. Solutions we are going to do here. I'm going to solve the problems and show you how this has to be applied. This is basically only the formula part, which I have not shared with you. What I thought is not as important. नहीं तो क्या होगा, notes ही इतना बड़ा होएगा, तुम समझ ही नहीं पाओगे कि क्या है क्या नहीं है. ये सिर्फ अपना बेसिक फॉर्मूलाज है, इसीलिए ये तुमको दिया नहीं है. बट ये डोंट वरी अबाउट द नोट्स. आई एम शोइंग यू ऑल दिस. सम करने के टाइम इफ यू डोंट हैव, तुम्हारे इसमें भी स्टडी मटेरियल में भी है. अगर नहीं है तो मीन्स इफ यू आर नॉट एबल टू गेट, आई एम गोइंग टू टेल यू द फॉर्मूलाज आल्सो व्हाइल सॉल्विंग. ठीक है, डोंट वरी अबाउट द फॉर्मूलाज. बाकी सब नोट्स ऑलरेडी दिया हुआ है. जो जरूरी है वो नोट्स तुमको मैंने ऑलरेडी दे दिया है. Then you have margin of safety. Margin of safety is the difference between actual sales and break-even sales. Break-even sales मतलब क्या बोला तुमको? That the no profit, no loss situation. मतलब if you have, if I say that my break-even point is 500 units, what does that mean? कि when I make 500 units sales, I will neither make a profit nor make a loss. तो वो मेरा break-even point हो गया. बराबर. बट एक्चुअली में क्या हो सकता है? एक्चुअली में आई मे बी सेलिंग मच मोर. आई मे बी सेलिंग 800 यूनिट्स. तो मेरा मार्जिन ऑफ सेफ्टी क्या है? एक्चुअल सेल्स माइनस ब्रेक इवन सेल्स. मतलब 800 यूनिट्स जो मैंने एक्चुअली बेचा एंड माय ब्रेक इवन सेल्स वाज 500. सो 300 विल बी माय मार्जिन ऑफ सेफ्टी. मतलब कितना मैं सेफ मार्जिन में हूं. द ग्रेटर द मार्जिन, द मोर इज द सेफ्टी. जैसे एकदम सिंपल एग्जांपल, तुम्हारा जब एग्जाम्स होता है, प्रीलिम एग्जाम्स, या तुम्हारा अभी आईसीडब्ल्यू का ही एग्जाम ले लो. आईसीडब्ल्यू एग्जाम या पासिंग मार्क्स इज 40, राइट? सो दैट इज अ ब्रेक इवन पॉइंट. उसके ऊपर मिला तो अच्छा है, नहीं मिला तो गए काम से. करेक्ट. सो मार्जिन ऑफ सेफ्टी, सो योर ब्रेक इवन पॉइंट इज 40, बट यू मे स्कोर 60 मार्क्स इन कॉस्टिंग. सो क्या हो गया? तुम्हारा मार्जिन ऑफ सेफ्टी कितना है? 20 मार्क्स का मार्जिन ऑफ सेफ्टी है. तुम्हारा एक्चुअल मार्क्स मिला 60, पास मार्क्स है 40, सो 20 इज योर मार्जिन ऑफ सेफ्टी. तो इसमें ये मार्जिन ऑफ सेफ्टी जितना ज्यादा है उतना अच्छा क्यों है? समझो अपना पेपर बहुत टफ आ गया या चेकिंग में तुमको लगा टफ हो गया है, देन स्टिल यू नोट कि 20 मार्क्स है ज्यादा, चलो 10 मार्क गए बिकॉज ऑफ हार्ड पेपर. इवन देन व्हाट विल हैपन? You will still pass the exam. That is the importance of your margin of safety. Okay, then your sales formula. Many times, or you can say most of the times, your companies decide how much you want profit. You may think, okay, I want last year's profit, or you may decide I want 20% of my sales, whatever. Every company has to decide how much should be my profit element. So marginal costing has given us one technique: sales required to achieve desired profit. I'll tell you all to write or remember this last formula. ये बहुत important formula है. I say it important और I say it is magic formula because इसमें से 3-4 चीजें आप कर सकते हो. ये जो last वाला formula है, sales revenue is equal to fixed cost plus profit divided by PV ratio. Because अगर marginal costing का problems देखते हो तो बहुत बार what is asked? They ask you that sales is given, what should be the profit? Profit is given, what should be the sales? Fixed cost, how much? PV ratio, how much? All these things are asked. Hence, this formula, if you remember, you can solve many problems. Okay? And hence, just see to it that you will remember this formula. ये बहुत Acha formula hai. Acha means that it will help you in calculating many sums. So you can write down this formula if you don't have that. This formula we have to remember. Baki bhi sab you have to remember everything anyways. But this is easily handy and useful. Okay. Okay. Fine. Everybody got the concepts of marginal costing. Now we will see how we apply it. So marginal costing, what do we do? In marginal costing, your cost is divided between fixed and variable cost in order to arrive at profit and take decision, helping management in decision. So remember the techniques used: PV ratio, break-even point, margin of safety, and sales formula. Right? These are the important points, and you have to do formulas of each one. Contribution is a basic one which you know: sales minus variable cost contribution. Right? Now let us see, or let us go to examples. I have given you a note. I have given you notes. In that, you just take out the note where you have got the first question. Question number 1. Question number 1. Everybody has question number 1. Okay. I'll share now the answer because I'll do the answer for you all. 1 minute. Right. You all can see the blank screen. So we can solve the answer here. Right. You all saw the first question. The following figures, yeah, we will be solving. So you all will also be solving along with me. I assume you all have your calculators, your notebook, pens, everything with you ready, and the questions ready with you in hand. If you have forgotten the formulas, which you shouldn't be forgetting now that exams are near, but anyway, I will repeat the formulas for you all. And now what we will do is I'll show you how problems on online will be given. Okay. First, let us see the first question. Following figures are available from records of ASG Enterprises as on 31st March. Right, you all got the problem. You all took out the problem. Sales for 2 years, 2013-14. Profit for 2 years, 13 and 14. Your first question. From the above details, answer the following. PV ratio of the company is, and they have given you 4 options. Okay. So let us see PV ratio. 2 years questions are given. So when you get 2 years figures, which formula you use? PV ratio, change in profit divided by change in sales. PV ratio change in profit divided by change in sales. Change means the difference. Difference in 2 years profit. How much is a 2 years profit? 1,50,000. Oh, 1,50,000 minus 1 lakh. Change in profit. That is the difference in your profit figure divided by change in sales. Why I'm writing this full is, in next time I'll not be writing full, I'm writing this full so that I show you what is the difference in your old method and in your new method, online method. So I'm writing this full in detail. I know some few students have already got the answer. I'm very happy about it. Change in profit upon change in sales. You all know that you show this in percentage, PV ratio. So into 100. This is only to show you how you will get 50,000 divided by 2 lakhs. Right. Now I'll tell you, PV ratio is 25%. If you know the old method, that is your offline exams, what they used to tell in offline exams, same question used to get. Used to get a problem that calculate PV ratio, calculate fixed cost, and so on. So calculate PV ratio, when they tell you what you will do, you will show so many steps. You had to show so many steps, and then screen nahi dikh raha hai? Zoom the screen. Zoom the screen. Screen किधर से zoom करने का है? You are not able to see this? Okay. So here in our offline exam, we had to show all these details and I get 25%. Now in your online exam, what you will have to do? Same way you study. You all got the answers 25%. Same way you study. See how the question will be asked. They will give you the question. Then they will give you the first answer option. From the following details, answer the following. PV ratio is 25%. So directly you go to option 2 and you put tick. Right? So some people have written, we don't have the question with you, with me. Students, it was already sent. All the questions are already sent yesterday. Manzari sir, some students are saying we don't have the questions.
Ask them to check the email. It is in their email box.
See, the questions are in your email box. Kindly check your email box. It has been sent yesterday. Okay, all the questions have been sent yesterday. So it is in the email box, is what they say. But students are keeping on saying we don't have. Can we resend them right now?
Okay,
If they don't have.
Okay.
Because many are writing we don't have questions. Because it has been sent in mailbox, students. Please check your mailbox. Otherwise, they are sending you again. Yes, someone is saying it was in the link shared yesterday. So it is there. Just check, students. Please check. Okay. So if you... zoom. So when we show our traditional method or offline method, it is this way we have to see everything. Online, what will happen? You directly have to show 25% and you're done. Take 25% and you're done. Okay, see the second one. Second, B, question B, fixed cost will be. Now for calculating fixed cost, I told you all one last formula, which is very important to do everything. You can use that formula. Sales is equal to fixed cost plus profit. See students, and one more thing, that I'll be sending these questions every day. So if you don't get it till night, please check the link and just get back at that time, because these questions will be sent always. And I think sir is again sending it right now. So if anyone has not got it, please get it. Check your mailbox. Fixed cost is equal, sales is equal to fixed cost plus profit divided by PV ratio. What have they asked you? Calculate fixed cost. You can take any one year. You all know fixed cost is a cost which remains constant irrespective of the level of activity. Split screen. Okay, let me finish this problem. I'll just check split screen if I'm able to do, so that question and answer we can show. But I think it will be more better, because otherwise that screen will be very small. If you all have questions, that will help you all to go ahead. Or maybe tomorrow what you all can do is that once you get the questions, now that lockdown is no longer there, you can get a Xerox or printout of it if that is suitable for you all. Okay, because here we have a lot of problems, and since it is accounts question, I think it will be better. Fixed cost, as I said, sales is 6 lakhs any 1 year, because fixed cost is a cost which remains constant. Fixed cost is what you have to find out, plus profit of the same year divided by PV ratio. PV ratio we have already calculated, 25%. So what will be the answer? 50,000. So you can go in that 50,000 and we can take. Correct? Directly you can take. See the third one. I feel it's okay. Everybody's understanding. Okay? Yeah. Sales revenue required to earn a profit of rupees 2 lakhs. Again, as I said, you can use the same formula. This formula, that's why I said, remember this formula, you can do by using many things. Sales required to earn a profit of 2 lakhs. So here you have to find sales. Sales is something we need to find. Fixed cost we have just now found. Profit required is 2 lakhs. PV ratio we have found out. Our first answer PV ratio. Fixed cost second answer. How much is the sales? The sales. I answered 10 lakhs. Right? Sales 10 lakhs. Okay. Next, your last one. Your margin of safety at a profit of rupees 1 lakh. So margin of safety ka formula, profit divided by PV ratio. Margin of safety at a profit of rupees 1 lakh divided by PV ratio we just found out. What will be the answer? Profit divided by PV ratio. Four lakhs, right? So here they have given you 4 lakhs. Now I think you all must have understood what I'm trying to tell you all here. See, as I said, many students were asking me, ma'am, what or how. Yeah, many students were asking me that how a practical problem can be shown in MCQ method. So now, if this is very clear to you, see now if you see this question, what happened in this question? They used to give you question offline when your exams were offline. They gave you question, correct? Then they used to say calculate PV ratio, calculate fixed cost, calculate sales revenue to earn a profit, calculate margin of safety, and then the sum had maybe 8 marks, for example. Correct? This was how you were getting the sum. But now what happens? Now in your online exams, how you will be given? Question will be same, right? And then instead of saying just calculate PV ratio, they will give the way they have given you now in this question which I have given you. From the above, PV ratio will be and 4 options. Fixed cost will be and 4 options. So now you will understand the benefit of this. See, all of you all were able to do the answers, right? Online with you will get exactly same. Online, you will have the question like this only. You have to go to the right option and tick. So now you all understood that you all had exactly or you all could exactly solve the problem. So question of studying, your studying pattern does not change. You have to study exactly the way you have been studying so far. Only what will change? Change will be the pattern of answering the question. So now you will say online is more easier. I can tell you that you will be very happy that you had online exam. Why? What is the benefit you are going to get? First benefit is you don't have to remember the formats directly. Just a PV ratio you can directly it is there in your mind or on your calculator. 1,50,000 minus 1 lakh, so 50,000. Change in profit hai, change in sales hai 2 lakhs, so I will do directly on my calculator 50,000 divided by 2 lakhs and I get 25%, right? So I save my time in my online exam because I don't have to show any format, I don't have to show any formula. Directly first answer diya hai na, they have given you first question, they have given you 4 options, choose the option and you're done. You just have to keep one paper of work, rough paper with you that they will tell you how and what, and then if you want whatever working you have to do for yourself. For examiner, what is the final? Option ticking, that is the final, right? So you have got one benefit, formats, all that is not to be remembered. Second, you don't have to keep on writing steps and formulas. You can do as fast as you can based on your capacity. So if you remember in classroom when we are taking lectures, many times students say, ma'am ye jaane do na, exam mein karenge, we will do in exam full detail formatting, right now let us only do like this shortcut. So now online exam is giving you this facility of doing shortcut even in exam, directly answer likho, right? So that is another advantage. Third advantage is you can cross verify your answer. Now when you're writing your answer, okay, at that time what happens? You have written 25%, but you don't know whether you're right or wrong. Now if you see this, they have given you 4 options. So if 25% was not in the option, like for example, if you calculate PV ratio by using the formula and you would have got 28%, then you know you are wrong, because what used to happen? Option is saying only 20, 25, 30, 35. How did I get 28%? So I'm wrong. That you can understand. So cross check of your answers automatically takes place in online checking. Thirdly, if you forget the formula, like PV ratio is change on something, you feel okay, it is change in sales upon change in profit. It is like that. If you're confused about the formula, कि फॉर्मूला क्या है, चेंज इन प्रॉफिट अपॉन चेंज इन सेल्स है कि चेंज इन सेल्स अपॉन चेंज इन फॉर्मूला ये है, क्या है, वन ऑफ द टू, you may get confused. But at that time okay, let me calculate both and see. Then you have the answers available to you. So you will know, okay, by this formula I'm getting one of the answer and hence this will be the correct formula. So it helps you as a lifeline. You all must be seeing the TV serial na Kaun Banega Crorepati. That time चार ऑप्शंस है तो you know कि ये चारों में से ही आंसर है. If I get fifth answer, I am wrong. That is one. So you get an option of choosing an answer. Sometimes luck also helps you. And lastly, most important that you don't have to get, or there are no negative marks, so you don't have to worry about the negative marks. Satish? Okay, you don't have to worry about the negative marking, correct? That is what helps you. Okay, that is what helps you to get better marks in online. Increase the screen quality. Satish, 1 minute. They have written here something. Spotlight is on. Okay, you can see now. Spotlight is on. Spotlight video. Okay, fine. So you'll understood. So don't worry about the online exam. Just be very clear. Screen quality. You are not able to see the screen. Okay, anyway, I'm not able to get what is the screen name. Fine. Is it okay? You all have understood right now? Now,
screen is not visible, ma'am.
है ना, visible है ना?
नहीं है, visible नहीं है. स्क्रीन शेयर करना पड़ेगा.
क्या करना पड़ेगा?
स्क्रीन शेयर स्क्रीन.
नहीं, right now I'm only speaking. I'm not sharing the screen right now.
So screen is not visible. Whenever you share, then it will be visible.
But otherwise you all are able to see me and the screen when I'm sharing, na?
Yes.
Hello.
Yes.
Okay. Yes, see, this is the I am talking today regarding paper pattern for cost and management accounting. For every subject, the individual professor may tell you, but according to me, it might be same. But for you, for entire cost and management accounting, it will be like that only. The paper pattern will remain same. What they may do is that 2 marks. Here I had asked you 4 marks, 8 marks, 4 questions. So you will get 2 marks, 2 marks, 2 marks, 2 marks. You all know practical problem is either 8 marks, 6 marks. ऐसे बड़े होते हैं ना, you have that only. Your paper pattern will remain. Old offline paper pattern will remain. Only thing is your answering will differ like we did now. One more problem, I will show you all how the answering has to be done. So don't worry at all. Online is more beneficial to you, is what you will understand later on. After your exams, you tell me online was good. Only thing is your technical problems, and your generation, there is no problem in technical also. You all are good at that also. So you don't have to worry. Okay. So very clearly, study pattern same, very easy. See now the next question, second question. This is regarding our second part of marginal costing and decision making. Now, when you're saying decision making, what is decision making? Decision making is taking decisions on various issues. Management has to take decisions, say shut down or continue operations, or expand or contract these operations, level of activity to be produced, and so on. So all these are various decisions management has to take. One of the important decision is also key factor. Key factor or limiting factor, remember this word, key factor, limiting factor. That is nothing but limited resource, a resource which is in short supply. Now what happens, see why a management or how a decision is required to be taken. Generally, in any and every organization, there is limitation of one or more resource. Resources are in short supply, and if you say options available are many, correct? And hence you need to take a decision whereby you will make maximum use of the available resource. That is where we take decision. Today we'll take one of the problem on decision making, where again I'll show you offline how they were asking you and online how they will ask you. So it will be very clear to you. You don't have to worry at all. Okay. Well, let us see the second question which I have given you. Here we will solve the way screen is not visible. Okay. Here we have to say or see that how your question will be offline and online. First we will do offline. Question 2. Just take question 2 which I have sent you all. Pankaj Limited is engaged in manufacturing the manufacture of two products A and B and gives you the following information. They have given you they have two products A and B. They have given you information as to selling price, as to material cost, labor cost, variable overhead is 100% of wages, fixed cost and units. Show contribution of each of the product A and B and recommend which of the sales mix should be adopted. What is sales mix? Combination of units. Matlab how many units of A and how many units of B to be sold so that you get maximum profit. That is sales mix. Okay. Fine. I'm sharing the screen with you again. Okay. See the first part. So first they have asked you calculate contribution of each product A and B. You all know now contribution is A and contribution is selling price minus variable cost. So let us have, I'll prepare a table. Okay, fine. See in table the number of columns and capital small उसके ऊपर ध्यान मत दो. Anyway अभी तुम लोग का online है, so you don't have to bother about that also. And we are not here in any technical or English class. So here if it happens capital or small, please don't bother about it. See the costing and accounting part of it. Right. So let us have a table. Particulars product A and product B. Okay. What is contribution? Selling price minus variable cost. So let me have selling price for A is 20, for B, sorry, selling price of A is 60, B is 100, less variable cost, direct material. This information is already given to you all, right? This information is already there in the question. Material 20, 25, labor, variable overheads, 100% of direct wages, means same as direct wages. So sales minus all this cost will give you contribution per unit. Sales minus all your cost. So contribution per unit 20 and 45. Your first question, correct? Then see again here, which of the following sales mix should you adopt? They have given you A, B and C. Three sales mix they have given. So what is sales mix? How much, what sales mix is a combination of products. A, how many products? B, how many products we should make? So that what is our profit? The sales mix which gives you highest profit is the sales mix you will adopt. So this is okay. So you got your contribution 20 and 45. Just remember this contribution. You all know in your marginal costing, you can start with contribution less fixed cost, that is profit. Here two columns are okay. I'm not deleting the column. I'm just continuing like this only. Your sales mix 1. Right, we'll take your sales mix 1. What is sales mix 1? A is 300 units and B is 600 units. So product A 300 units. What is the contribution of A? We have done in the first table at the rate of 20. B, how many units? 600 units. B's contribution we have done in first table. Total contribution of sales mix. What is total contribution? Contribution of A, contribution of B. A ka contribution is units into contribution per unit. Contribution per unit we got in our first table. B, units into contribution per unit. Our first question we are doing A, sales mix 1. Correct? So you got your total contribution A plus B total less fixed cost. How much is the fixed cost? 10,000. That is your profit. Correct? So your profit is 23,000, right? Your contribution, total contribution for the company less fixed cost profit. So your profit of first sales mix we got, right? We go to the second one. You have to calculate for 3, na? A, B and C. We have to calculate for each sales mix and then see which one is giving us highest profit. So let us go to sales mix 2. A का कितना units है? Sales mix 2, 450 units of A at the rate of 20. And 450 units of B at the rate of 45. Correct? So you get 9,000 and 20250. So your total cost will be total contribution 29. So profit will be 19,250. Perfect. I can see some students have got correct answer. Very good. This is your sales mix 2. Right? Contribution minus fixed cost profit. Now this is your offline method how you are doing. If you are studying for this exam, how you would have studied and done. Sales mix 3. Let us go to the third one. How many units of A? 600 units of A. And 300 units of B. Just calculate and tell me the total contribution. $15,500. Right? 15,500. So now here you got for all the 3 sales mix, you all got profit figures. For your first one is 23,000, second one is 19,250, and third one is 15,550. So what should be your choice? Choose. Choose option 1 is the best or option A is the best as it has highest profit. So we have to write all this. If you do offline study, right, for this question, what will happen? You have to write all the statements, you have to write all these sentences, tables, everything. But this is the way you study and you know how to do this sum. Correct? Now, suppose if we say, okay, this is how we do this sum. Now let us see what happens. This is only one more sum I'll be showing. Then we will be doing normally as per our other we used to do. Now see question number 3. Same question, how you will get for online. Same question, how you will get for online. Correct? They will say contribution per unit of product A and B is. We got our first answer. First answer was 20 and 45 A. So directly you can take A. So here how much calculations you need to do is up to you. You don't need to show any of the statements. You don't need to show any formats and all that. You can do directly on calculator if you can, or you can do in any rough method you can. Answer is what you have to finally say. Then see the second question. Same question ka answers. Same thing I am showing again how we write in online. If 300 units of A and 600 units of product B are to be sold, that is your option 1 pucha hai, barabar? 300 units and 600 units of product B, then the profit of the company will be. What was your answer? Our answer we have already calculated. 23,000. Right? Your first one. 23,000 which we have calculated. So directly you go to option number 2 and you click. Then you go to option C question. If 450 units of product A and 450 units of product B are to be sold, this is option B. What was the answer? 19,250. Correct? It was 19,250. So here directly you can go and click the option. So now you all understood what it is. Your first, second and third. So here you may have 2 marks, 2 marks, 2 marks. What is the method of studying? Method of studying exactly same like we did when we had to do offline study. But now method of answering, you have options available, no negative marking and no possibility or no requirement of any formats. That's only the difference. Did you all understand what will be the difference? So you don't have to worry for online exam at all. Exactly study like the way you have been studying for your offline exam and come with full confidence to your exams. Fine? You all get me? This is how it will be there. Now I'll not be showing the differences. I think I have understood it better, so that we proceed with our topics further. Because as you all know, the portion is vast and time is very less. This portion we teach for one full semester. Today we have to brush it up in 3 days, right? So now, this is how we go ahead with our answering of online exams. Okay, all set for the next part of the same study note. That is next part of tools of decision making. Next part of our decision making tools, it is called as transfer pricing. Now, what is a transfer price? What is a transfer price? Transfer price is the price of flows of physical goods and services among the divisions of the company. I'll tell you how it operates. Suppose I have one company, company X. Company X has two divisions. Division A who is transferring goods and services to division B. Okay, you have division A. You have one company, company X. Division A of company X is transferring goods and services to division B of company X. Now, the rate at which division A will transfer to division B is called as transfer price. The rate or the price at which one division of a company transfers its goods and services to another division of the same company is called as transfer price. Now, what are the issues of transfer pricing? See here, gone are the days when there was no competition and people could have or charge any cost. But now what has happened with even global competition you have to face, so cost consciousness has taken importance. Cost consciousness has gained more importance. So what every company wants, that their company produces at minimum cost so that the profit will be maximum, right? So when they have to produce at minimum cost, every department in the company, that is both these departments will have to reduce its cost. And what they see, that cost is what is in our hands. Every department wants to make maximum profit. Why they want to make maximum profit? Because here you have both the divisions. The managers of each division is responsible for the profits of that division. Correct? So their pay scale, you can say, their variable pay portion or whatever incentives they are getting is directly linked with their pay scale. So manager of each division wants to maximize their profit. Okay, so because of that, what will happen? Division A will want to get, or division A is transferring goods to division B, right? So division A is like a seller selling goods to division B. Division B is like a buyer. So the mindset of division A or behavioral traits of seller and buyer come into picture here. What does seller feel? Seller wants to sell goods at highest price. What does buyer feel? buyer wants to buy goods at lowest price. You all know this happens in our daily life also. If we are a buyer, we want कि price कम से कम होना चाहिए. We want less price. If you are a seller, what happens? You feel the price should be more and more. I should sell at maximum price, and hence they have to decide on a rate at which both feel acceptable. So the rate at which division A will sell to division B is called as transfer price. And implications of transfer price are, for division A it is a revenue, for division B it is a cost, because division B is buying. That is where transfer pricing issues come into picture, and this is another technique of decision making. Every company, every manager of every division has to keep on taking this decision as to what should be their transfer price, whom they should sell their goods, what should be the profit margin at which the other person will take, and so on. Correct? So transfer price, most of the problems are deciding on the price between two or more divisions of the same company. Correct? Now let us see, let us go to an example of how this is applied in real life. You have problem number 4 in our question. I have given you the question sheet. So problem number 4 in that. Fine, you all got question number 4 in our sheet. You have a question on transfer price. ABC of a company. Everyone has got question number 4. ABC of a company fixes its interdivisional transfer prices for its products on the basis of cost plus a return on investment in the division. What is the selling price? Selling price means total cost plus profit. It is your selling price. So here, as we say, one division is a transferring division. So for them it is a sales. Another division is a buying division. So for them it is a cost. Correct? So let us see here. They are saying it is fixing its interdivisional transfer prices on the basis of cost plus a return on investment in the division. So your total cost plus profit. What is the profit figure? Profit figure should be the figure which is a return on its investment. We'll see further what is the percentage. They have given you a table for fixed assets, current assets, and debtors. So what are the total assets? 2,50,000 plus your total assets. Correct? These are your total assets or capital employed. Right? 5 lakhs. Then they have given you fixed cost 4 lakh, variable cost per unit is 4 lakh. The variable cost per unit is 10. Budgeted volume of production is 20,000 units and desired rate of return is 28%. Yeah, 5 lakhs is your total assets involved. How much should be the profit figure? Profit figure is 28% of the total asset involved. See, return on investments. The given a desired return on investment is 28%. So what should be the transfer price? Total cost plus profit. Total cost is fixed cost, variable cost, and profit is return is 28% on your total assets. So your profit figure should be 5 lakhs into 28%. So all this together will give you your transfer price, right? Let us go ahead. You all got this. Okay, calculation of transfer price. Variable cost. Yeah, transfer price is variable cost plus fixed cost. Correct? What is 6,40,000? Someone has written it is the wrong answer. There's no 6,40,000. Your total, Sanil, what is 6,40,000 you have written? 5 lakh is a correct answer. See, variable cost, it is how many units? See, just after your first paragraph, just after your table, they have given you budgeted volume is 2 lakh units per annum, and last line of your table, variable cost is rupees 10 per product. So 2 lakhs into 10. Fixed cost given, fixed cost remains constant. So your variable cost plus fixed cost plus return on investment. So total cost, fixed cost plus variable cost is your total cost plus profit, that will be your selling price or transfer price. So return on investment is how much? 28%. 5 lakh pay into so your sales value is 25 lakhs, 40,000. So transfer price is total divided by number of units. Okay. Transfer price 12.7. Your total cost divided by number of units. Then your second part, 12.35, someone has written, that is the wrong answer. 12.7 is the correct answer. Then in your first question, 12.7. Okay, very good. Your second one, if the volume in units can be increased by 10%. So today's volume is, okay, volume increased by 10%. So volume will be, today's volume is 2 lakh, increased by 10%, 2 lakh 20,000. What will be the impact on transfer price? Okay, so variable cost will be, variable cost changes with the change in the level of activity. So 2 lakh 20,000 into 10. Fixed cost remains constant. Even return on investment will not change because investment has not changed. Return percentage has not changed. So that will remain same. So your sales value will be 27,40,000. Correct? ठीक है? 12.45. So what have they asked? What is the impact on transfer price? What is the impact on transfer price? Transfer price reduced from 12.7 to 12.45. So transfer price reduced by 0.25. 13.7 आंसर आ गया, गलत है. 13.7. 12.45 is the correct answer. 12.45. Okay. Fine friends, this is how you got your transfer pricing. So again, the method of online exam is same. Like I showed you for the first marginal costing and all, they will ask you 1-2 questions and you have to just see the option and write. Study method very same. So we are not going to see again and again for every problem what should be the amount. It has to be what should be the method. It is to be the same, right? Now let us move to our next part, that is budgetary control. Our next part, budgetary control. Now I told you all that marginal costing is a decision making technique, right? So budgetary control is a control technique. Marginal costing is decision making technique. Budgetary control is a control technique. That is where management is aided in controlling cost. I'll just share the screen with you. Okay. Your next part, budgetary control. Someone is asking negotiated pricing under transfer pricing. Now, under transfer pricing, as I said, that A will transfer to B. So when A transfers to B, A will say this is my selling price, but B may not agree with that. It's exactly like the negotiation which take place in the normal bargain. You all must be doing bargaining. If you go to buy clothes, right? The seller will say it is for 2,000 rupees. You will say nahi, bas 800 mein de do. Then they will say no, I will give you for 1,800. This person will say no, 1,000 is okay. That is a bargain, negotiation between a seller and a buyer. Same way, many times what happens in an organization, the selling division is always not will fix some price, but buyer division or the division which is getting the goods will not always accept whatever the seller is saying or the selling division is saying. Then they will not, since there is no acceptance between two, they will sit and negotiate that what is the best price, what is the suitable price. Based on the data they have, they will negotiate and arrive at a price which is acceptable by both. That is called as negotiated pricing under transfer pricing method. Okay. Chalo, someone was asking this question, so I just interrupted and told the answer. Now let us go ahead with the next part, that is budgetary control. Now, as I said, budgetary control, it is a control technique. So what is a budget? Budget is a normal word which you all always use. My budget is so much, my budget is so much. What is that? Financial and or quantitative statement prepared and approved prior to a defined period of time. That is your budgetary statement or budgetary control. And now, what are the steps? How does this operate? First, you set budgets, then you see what is the actual. You compare your budgeted cost with the actual cost and see what is the difference, which is called as variance. Report the variance to the management so that you can take right action at right time. Okay, and bring the cost under control. That is how budgetary control operates, helping management to bring cost under control. Then you have types of budgets. Type of budgets are functional, master, fixed, and flexible. Now, what is functional budget? Functional budget, it is budget of each and every function. You know, in organizations, you all have various functions. Production is there, administration is there, then selling is there, distribution is there, purchases is there. All these are various different functions in the organization. So a budget prepared separately for each function is called as functional budget. And summary of all these functional budgets is called as master budget. Then you have fixed and flexible budget. Fixed budget is a budget which is fixed, that is, it remains unaltered for a long time. So generally, if you have fixed expenses, then the budget that you prepare is fixed budget because it doesn't change. And flexible budget is a budget which changes with change in the number of units. So suppose I have 10,000 units, I will have one cost, whatever is the cost. Then if I go and make 15,000 units, then I will have another cost, that is my cost will increase. Now that is called the budget which is prepared for showing this changes in cost is called as flexible cost. Okay, another important term in budgeting is zero based budgeting. This is another important term in budgeting, zero based budgeting. What is zero based budgeting? Suppose uh, when a manager prepares a budget, finally it has to be approved. So suppose a manager prepares some, if I prepare a budget and say that administration cost is going to be 10,000 units, then under traditional budgeting, what they used to say that okay, last year the budget was 8,000 units. Now you are saying the budget should be 10,000 units. So why are you saying that budget should be 10,000? Why this 2,000 rupees are more this year? So managers had to explain whatever additional amount they are asking as budget. Last year 8,000 था तो ठीक है 8,000 होना ही चाहिए. That is what they feel. So today you are telling 10,000. So explain 2,000. That is what is traditional budgeting, right? Or it was called as incremental budgeting. But what is zero base budgeting? Zero base budgeting is there is zero base, no base. I have to explain each and every amount I am showing as my budget. So suppose I say my budget this year is 10,000 units. I will have to justify each and every pie of 10,000 units. I will, rupees. I will have to explain to management why I am saying 10,000 rupees. I cannot say last year 8,000 was there, so this year 2,000 I am giving extra, bonus to somebody. Nothing like that. You have to say 10,000. You are saying why 10,000. So irrespective of what was the budget in the previous year, if you are making a budget this year, you have to explain each and every cost. That is why it is called as zero based budgeting. Your budgeting has no base. Explain everything, right? So this is an important concept which helps to remove any mistakes in the past, because I'm going to explain each and everything. Now, under your budgetary control, again you have two different types of problems. One problem is flexible budgeting, where at different levels of activity, how the budget changes is one thing that they are going to ask you. And second is your functional budget. As we discussed, there are various functions in the organization, correct? So you have to they will ask you to prepare budgets for various functions. So two different types of budgets are there. One, that is flexible budgeting. Second, functional budgeting. Now see here, this is the most important part. If you want, you can write down somewhere, because this is a concept of fixed and variable cost. So if you know this concept very well, if you remember this concept very well, flexible budgeting is done, right? You don't have to worry about flexible budgeting. So even at night, if I wake you up and say, okay, tell me the behavior of cost, you should be able to tell. So this is what you need to remember. You can write down somewhere this if you don't have, or if you don't remember. Now in my lectures, I generally also tell students how this has come or how this is applicable, so they remember. But now, as we say, it is revisionary lectures, I cannot tell how and what and all. We will just see what is the final conclusion here. Fixed cost. When I say fixed cost, is a cost which remains same or it does not change with the change in the level of activity. That is, the total fixed cost remains same. When I say variable cost, is a cost which changes with the change in the level of activity. That means it is a total cost which changes with the level in activity. So when we are saying fixed cost is same or does not change, variable cost changes, we are referring to total cost. Cost per unit is different. Now see, so fixed cost, under fixed, if a cost is a fixed cost, what is same? Total cost is same. If the cost is variable cost, what is same? Cost per unit is same. This is something which you have to remember. Very, very important. Fixed cost, total is same. Variable cost, cost per unit is same. Just remember this, write this somewhere. This will help you in all your flexible budgeting problems. Okay. Now let us see one example I have given you all. That is the next question on budgetary control on our flexible budgeting. Just take out next question. Okay. Now I'll tell you how to apply this concept. Okay. See what they have given you. Everybody got the problem of budgeting. Expenses budgeted for production of 10,000 units in the factory is given below. So they have given you various expenses for 10,000 units, and they have asked you to prepare a budget for production of 10,000 units, 8,000 units and 6,000 units, showing distinctly marginal cost and total cost. Marginal cost means showing distinctly variable cost and total cost. Okay, so let us have a table. Let us have a table with 7 columns. Just prepare a table with 7 columns. Okay, you all got it? See, 10,000 units, 8,000 units and 6,000 units. They have given you. So for each one, we have to find out cost per unit and total cost for 10,000 units, cost per unit and total cost for 8,000 units, cost per unit and total cost for 6,000 units. They have asked us to prepare a budget for these three levels. They have given us one level, that is 10,000 units. Okay, all ready? Should we start? All ready? Should we start? You are able to hear me? Are you all able to hear me? Vansari sir? Okay, fine. So should we start now? So first part is variable cost. I will suggest 1 minute you all don't write. You all just see how we apply the concept and then you all can go ahead with solving. Okay, so just 2 minutes you can put your pens down and just see how we are, how we will be doing this problem. Okay, so just see, don't be busy writing. You can solve later on. See here, we have first variable cost. They have asked you to do into two parts, variable cost and fixed cost. They have given us for 10,000 units. So I'm writing down all the costs for 10,000 units. Direct material 70. This is what they have given us directly. Direct labor. Selling expenses, see they have said selling expenses is 10% fixed. So what does that mean? 10% is fixed means 90% is variable. How much is selling expense? 13 rupees. So 90% of 13 is variable. Distribution, they have said 20% fixed means 80% is variable. Okay, now, right now, how do we apply the concept? So everybody please pay attention. As I said, once you understand this concepts of variable and fixed cost, life becomes very easy for you. Okay, so just pay attention here. In variable cost, what is same? Variable cost, cost per unit is same. I showed you all the table. Fixed cost, total is same. Variable cost, cost per unit is same. Correct? So what does that mean? That means if for 10,000 units, this is the cost per unit. For 8,000 units also, the cost per unit will be same. Whatever is the cost per unit for 10,000 units, same will be for 8,000 units, same will be for 6,000 units. It becomes very easy and simple. Why? Because in variable cost, what is same? Variable cost, cost per unit is same. How do you get total cost? Cost per unit into number of units. Cost per unit into number of units. Cost per unit into number of units. Right? So this is how we keep on doing this table. Yeah, you all can start now. Just start this variable cost. I hope you all have understood. In variable cost, cost per unit is same. So they have given you details of 10,000 units. What does it mean? Whatever is cost per unit for 10,000 units, same is for 8,000 units, same is for 6,000 units. How do you get total cost? Cost per unit into number of units, cost per unit into number of units, cost per unit into number of units. Again here same, cost per unit into number of units, cost per unit into number of units, cost per unit into number of units, and so on. So just calculate and just see if you can get this answer. Okay. See, selling and distribution. Selling, what have they given you total cost? Selling, they have given you 13 rupees and they have said 10% is fixed. So, where do I write? Here? No. Okay, for selling cost, they have given you 13 rupees. Correct? Out of which they have said 10% is fixed. Means 90% is variable. 10% is fixed means 90% is variable. So 90% of 13 is your variable cost. How much does it come? 7.7. Balance is fixed. Correct? Balance is fixed. And next they have said distribution expense 20% is fixed. Amount is 7. So 7, 20% is fixed. So how much is variable? 80% is variable. So you get 5.6. Okay. They have given you fixed and we are calculating variable. 10 is fixed means 90 is variable and 20 is fixed so 80 is variable. Okay. Fine. Should we go to fixed cost? Should I about this over? Your statement will continue, but as we said now, this is required for your offline or online. It may not be required, right? So this is over. You have to just continue below for fixed cost, but I need this heading, so I'm rubbing out this and writing fixed cost. All those are not finished, just write down the answers and then you can try at home, because here there's no question of making any mistake once you have understood the concept. Only thing what will happen, your speed may be less, so you have not finished. So you can just write down the answer of variable cost in 1 minute and I'll rub and we go to fixed cost. Okay, let us have fixed cost now. You have to continue in your question. They've asked you both variable cost and fixed cost. Now tell me what all fixed cost is given. Now again for 2 minutes, don't write, just be busy seeing and understanding. Material, labor, production or fixed production overheads. First we did only variable. Now we are doing only fixed. Production. Then selling. Selling we have found out some part as variable. The balance is fixed. Selling was 13 rupees. 10% is fixed. So distribution 20% is fixed. Right? Distribution 20% is fixed. Admin fine. Now see here, when you say fixed cost what is same? That was variable cost. Variable cost what is same? Cost per unit is same. Fixed cost what is same? Fixed cost total is same. So let us first find out the total cost. How do we get total cost? Cost per unit into number of units. Just see before doing, you can do later on. Cost per unit into number of units. Cost per unit into number of units. Correct? In fixed cost, what is same? Amount is same. Your total cost is same. What does that mean? Whatever is your total cost for 10,000 units, same is your total cost for 8,000 units. Same is your total cost for 6,000 units. Because in fixed cost, what is same? Amount is same. Your total is same. So whatever is the total cost of 1 unit, same will be for 8,000. Same will be for 6,000. How do we get cost per unit? Total cost divided by number of units. As always, cost per unit. Oh, total cost divided by number of units. Total cost divided by number of units. Okay. All those who understood, you can start. For those who have not understood, I'll explain to you again. Now we did variable cost. We saw the table. In variable cost, what was same? Cost per unit was same. Now we are doing fixed cost. Fixed cost, what is same? Total cost is same. What does that mean? Whatever is total fixed cost for 10,000 units, same will be for 8,000 units, same will be for 6,000 units. How do you find out cost per unit? Total cost divided by number of units. Total cost divided by number of units. Your total cost divided by number of units. Total cost divided by number of units. Total cost divided by number of units. And so on. Total cost divided by number of units. So just continue, I'll just come. I think you should have finished by now. We got 12.5, which is 12.5. Okay, 12.5 is total cost divided by number of units. 1 lakh divided by 8,000. Your normal, how do we get cost per unit? Total cost divided by number of units. 1 lakh divided by 6,000. You get 16.67. Okay, total cost upon number of units to get cost per unit. Total cost divided by number of units to get cost per unit. Okay, I think by now you should have finished. So if you all have not finished, then you can just write down the answers. You can just write down the answer. Okay, now this is how we do our traditional method. In our online method, what they may ask you, they may directly ask you, what is the total fixed cost for 8,000? No, this is the sum and the total fixed cost for 8,000 units is. So they may not want you to show this also. So much thing is not there directly. Your thing will come. Whatever is the options are there, you directly have to choose this. Or they may ask you your cost per unit is. Then we choose one of the options where it is the 137.3. You've got to be exactly in all our chapters. It will be of that type. They will ask you 3-4 small questions among the total sum that you know. But you should know the concepts for that. Your study should be exactly like this. You should know what is this. Randomly, you will not be able to do. You should know that when you have a problem of budgetary control, fixed cost total is same, variable cost per unit is same, and so on. I've written 2 point. Which one? This is here. Okay. Cost per unit is different, no? 2.16 है क्या? 2.16, fine. 2.167, correct. So they can ask you any answer that way only, same way for all our topics. Okay, you just copy down this. Done. Okay. Now we will go to, this is flexible budgeting type of problem. Another important problems in budgetary control is your functional budget. In functional budget, the important budgets that they ask you are your production budget and purchase budget. So do you all know how do we get production and purchase figures? I'll just show you. Okay. Second part of your budgeting, as I said, you all here have two types. One, your production budget. Second, your flexible budget. Your functional budget and your flexible budget. So flexible budget, if you remember the concept, that becomes quite easier for you to go ahead. Second, we have production budget and purchase budget. What are production figures? Again, this is what you need to remember. Many times I see students get confused. They know, okay, something is to be added, something is to be reduced, but they don't know what to add and what to subtract. So remember this. If you don't know this, or if you have forgotten this, just you write. This is another important point. What is production budget, or how you calculate production budget? Production budget is sales plus closing stock of finished goods minus opening stock of finished goods. Purchase budget, it is consumption plus closing stock of material minus opening stock of material. Okay, so these are the important types which you have to remember. Production is sales plus closing minus opening. Purchase is also consumption plus closing minus opening. What is the difference? Here you have, for production budget you will have finished goods. For purchase budget you have materials. Okay, so production budget, finished goods, purchase budget, materials. That is an important thing that you have to remember. In both the cases, it is plus closing minus opening. Okay, you all took down this if you want. It's important. As I said, there's no need to take down everything. It is there in the question or in your study material given. But such important things are not directly highlighted in study material at times. You need to see them somewhere, so it is better you write them somewhere where you are going to see during the exam. So now let us go to the next problem, which is production and purchase budgets. So remember the formula. Production is closing stock of finished goods and purchase is closing stock of materials. That is for both the cases, add closing stock minus opening stock, right? But for production budget it is finished goods, purchase budget it is materials, correct? Let us go to the next example where they have asked you regarding production and your purchase budget. I'll just get the screen for you. Here only. Okay. You all have a problem with you? Chalo, let us start. Kolhapur Chemicals report that next year he expects to sell 50,000 units. So your sales is 50,000. Just remember, of a certain product, the production manager consults the stockkeeper and gives his figure of materials to be purchased as follows. Two kinds of material, A and B, are required for manufacturing the product. So don't get confused between material and finished goods. Material is, I don't have anything with two things. Okay, I don't have anything handy here. In your college lectures, we have duster, which is very handy. Anyway, I think now this is this revisionary lectures. You all know materials and final finished product is different. Material A and material B, two products to make one product. You can say like this: material A and material B to make one finished product. Okay. Each unit of production requires 2 units of material A and 3 units of material B. It means if I make one finished product, then 2 units of A and 3 units of B I have to take. Estimated opening stock is given below. Then there's a desirable closing balances. So the first table is opening stock. The second table is closing stock. Prepare production budget. Okay, so let us prepare production budget. Somebody is asking consumption. Yes, we are going to come to that next. First, we will have production budget, always followed with consumption. Your consumption budget can be prepared only after you prepare your production budget, right? So sales is 50,000, we know, we have written down. So let us prepare a production budget. What is your, how do you get your production figures? Sales. You can write your production budget. This is a heading, by mistake I have written here. As I said, technical little bit problem, production budget. How do you get your production budget? Sales. How much is sales? We have seen how much was sales. 50,000. Add closing finished goods. Where do you get closing stock figure? Your first table is opening stock. Your second table is closing stock. So closing stock of finished goods. You know, for production budget we use finished goods. Yeah, we use finished goods, and for your purchase budget we use your materials. For both, add closing less opening. So sales, add closing stock, you get 64,000 less opening stock of finished goods. Less opening stock of finished goods. Where do you get opening stock? Your first table. Your production budget. Directly there's only one, just what you say, only one product. So remember your production budget figures. Many times the most commonly asked ones are production and purchase. Doesn't mean that you don't have to do others, but this is asked many times, so I have taken example on this. So your production figures are sales, add closing finished goods, which is the second table, less opening stock of finished goods, which is the first table. Correct? So this is your production. Once you get your production, then what you should know, how much material consumption is required. Because what is the formula of material consumption? Sorry. Formula of material purchase budget, consumption, add closing material less opening material. Correct? Your formula for your purchase budget. Closing material, you know from where you will get your two materials A and B, second table. Opening material, from where you will get your first table. They have given you stock of material A and material B. So estimated opening stock given in first table, estimated closing stock given in second table. What we have to calculate now? We have to calculate now consumption. So now let us see how we write consumption. I'll do here only. Okay. See, just before your first table, what have they given? Each unit of production requires 2 units of material A and 3 units of material B. What does that mean? If I make one finished product, I require 2 units of material A. So how much finished product I am making? 54,000. So how much is material A required? 54,000 into 2. Consumption is production into requirement. Production into requirement. Okay. Someone was asking how do we calculate consumption figures? Consumption of material A and consumption of material B. Material A and material B. Material B, how much is the consumption? If I make 1 unit, I require, if I produce 1 finished goods, I require 3 units of material B. I'm making 54,000 units. So how much I will require? 1,62,000. Correct? Yes, someone has given correct answer for the purchase value. Fine. Now let us do our production budget. Sorry, purchase budget. We have our purchase budget. How do you get your purchase figures? Consumption, add closing material, less opening material. This will be your purchase units. You have two materials, material A and material B. Correct, there are two materials, material A and material B. How much is the consumption? Just now we have done a working note. Add closing stock of material. Where will you get closing stock of material? In your second table, the closing balances at the end of the year is as follows. Material A is 13,000 in your second table and material B is 16,000. Less closing material sorry, less opening material. Correct? Then they have given you rates in your question. Material A can be purchased at 8 per unit and material B at 5 per unit. So rate units into rate per unit. This is what is given to you. Purchase units we have found out. This is very important. Just remember these two. How do we get production figures and how do we get purchase figures? That is important. What is purchase? Consumption, add closing minus opening. That will give you purchase units. So whatever is the number of materials they give you, whatever is the number of production they give you, once you remember this, purchases for materials and your production budget, closing stock of finished goods. For both, add closing, less opening, and you are done with your type of, what you can say, with your budget. Okay? Okay, I think by now you should have finished. Let us go to the next another important concept of budgetary control, that is semi-variable cost. This is something which I've shared with you all, semi-variable cost. Next sheet. Okay, so remember there are three types of cost: fixed cost, variable cost, and semi-variable cost. What is fixed cost? Cost which remains constant irrespective of the level of activity. So in fixed cost, what is same? Your total cost is same. In variable cost, what is same? Cost per unit is same. If it is neither a fixed nor a variable cost, what is the cost? It is your semi-variable cost. What is semi-variable? Semi-variable means partly fixed, partly variable. Okay. So if you have got a semi-variable cost, what are you required to do? As we know fixed cost, what are you required to do? Your total remains same. Variable cost, what are you required to do? Your cost per unit remains the same. So now you have a semi-variable cost. Semi-variable cost means you have fixed and variable elements which have to be segregated and you have to apply the respective rules. Okay, Kulkarni, someone is asking, see, class timings are 2 to 5. And please again, I tell you all, tomorrow I'll be already sharing the material which they will share with you today tonight. So everybody, please bring the problems with you so that it becomes easier for you to understand. Because tomorrow also we will be doing practical sense, because you should know what are the concepts. Plus you should know how they are to be applied practically. Our accounts we need to know practically how we need to apply. Okay. So here you are semi-variable cost. What do we do in semi-variable cost? Under one of the method, high-low method, your first step is variable cost per unit. You find out variable cost per unit by using the formula change in expense level divided by change in output level. Your first step, how we segregate is what we are saying here. Your second step, we find out total variable cost. What is total variable cost? Cost per unit, that is variable cost per unit, which you have found out here, into number of units. Then your third one is fixed cost. What is fixed cost? Total of semi-variable cost minus total of variable cost. So for your segregation, you are taking three-step procedure. First step, find out variable cost per unit. Second step, find out total variable cost. Third step, find out total fixed cost. Because what is semi-variable cost? It is partly fixed and partly variable. So for segregation, we will do these three steps. Okay, see the next example is given where I will show you all personally how this is to be segregated. Segregate your semi-variable cost. They have given you for the month of Jan and Feb units, semi-variable cost. Segregate the semi-variable cost into fixed and variable expenses using high-low method. Okay, I'll share the blank screen with you and show you how it is to be done. Remember your three steps you already have with you. First, variable cost per unit. Second, total variable cost. Third, total fixed cost. Okay, your first step, you have 2 months details given, Jan and Feb. Your first step is finding out variable cost. First step is finding out variable cost per unit. How do you get it? Change in expense level divided by change in output level. What do you mean by change? Okay, change means the difference. Difference in expense level. What is the difference? Your semi-variable cost 19,100 minus change in expense level. That is the difference in your expense level divided by difference in output level. Output, you can say output, units, quantity, volume, whatever. How much units? Change in expense level divided by change in output level. So what is the answer? 3. Three, correct? Your first step. What is the second step? Should I report this? Your first step, change in expense level divided by change in output level. Your second step, see you have semi-variable cost. What is semi-variable cost? Partly fixed and partly variable. It is divided into two parts, variable and variable and fixed. Correct? Semi-variable cost divided into two parts. Some part is variable, some part is fixed. What is the first step we did? First step was finding out variable cost per unit, which we got as 3. What is the second step? Second step is finding out total variable cost. How do you get total variable cost? Cost per unit into number of units. Now we are taking the first level. First level, your total semi-variable cost is 19,100. Let us take. Let us take the first level 19,100. Okay, your semi-variable cost 19,100. We take off one first one, that is in of Jan. This is of Jan, correct? 19,100 Jan of Feb. Question नहीं है मेरे पास अभी. Okay, anyways, one level we took. What is variable cost? Number of units into cost per unit. Second step. What will be third step? Okay, I just explain to you once again. Okay, semi-variable cost, total cost divided into variable and fixed. Variable is total cost into number of cost per unit into number of units, and fixed cost is the difference, 1900 minus 1400. So fixed cost. This is how we segregate our semi-variable cost. So remember three types of cost. One, it is fixed cost, total is same. Second, variable cost, cost per unit is same. Third, semi-variable cost, bifurcate that cost into fixed and variable portion by using three-step procedure. That's an important part for your flexible budget. For functional budgets, you have to remember production and purchase figures. Production, sales plus closing minus opening. Your purchase, consumption plus closing minus opening. So in both the cases, it is plus closing minus opening. What is the difference? Difference is that for production budget, you take finished goods. For your purchase budget, you take material cost. Very clear? Okay. If time permits, then we will see one more type of a budget, but otherwise we will see the next part, that is learning curve. Okay, I think everybody understood budgetary control. Okay, fine. Let us go to the next part, that is your next part of the study material, which is learning curve. I'll just share with you. Okay, learning curve. Now, what is learning curve? This is a common word which we use. Learning. I'm learning. What do you mean by learning? Learning means I'm upgrading my skills. I'm upgrading my knowledge. I'm learning something new. That is, I'm getting some ability to do something which I was not doing. That is learning. So when you say learning curve, What is learning? Learning is the process of acquiring skill, knowledge, and ability by an individual, that is improved performance. See now, why or how this learning happens? It's a natural process. Correct? Because what does this theory say, learning curve theory? You all know that we say learning, I say I'm learning. I'm learning means I'm acquiring skills, I'm acquiring knowledge, I'm improving my productivity, and so on. So this happens, this learning process happens with every person. It's a human phenomena. Correct? So according to this theory, if you do repeated operations again and again, or that is, or if you repeat the same operation, identical operation over and over again, then the time taken by you decreases, and hence what happens, your time decreases, because of which overall your productivity increases and your cost decreases. So learning effect is an effect whereby if a worker performs the same repetitive operations, then the productivity will increase and the cost will decrease. How do we go ahead with that? See, for example, if the learning curve is 80%, what does that mean? That means that if the production doubles, the cumulative average hours per unit shall be 80% of the cumulative average hours for the previous batch. So if my production will double, the time I will take, overall time will be less. This is a simple thing which we also experience in our own life. See, when you are studying for the first time, if you are taking 1 hour for doing one particular sum, okay, my screen is not being shared, hai na? Okay. So, we know that as and when our production doubles, even we know that learning takes place here also, correct? Because as and when I do my as and when I study, suppose you all are studying, you all know, you all must have experienced this in your own case. You are studying, maybe you are taking 1 hour to do a particular sum. If you are doing it second time, then what will happen? Then what happen? You all are not able to see the screen. Uh, Vanzari sir, we are able to see the screen.
No, not visible.
Not visible. Is it okay now?
Now it is okay.
Okay.
Now we can see it.
Okay. Thank you. See here, so this is something which you all, okay, should I repeat what we said? Learning is a process of acquiring skill and knowledge and ability by an individual, that is improved performance. Okay, so now you know that we experience it even in our daily, in our own experience. You all must be doing a problem. When you're solving a problem for the first time, what happens at that time? You may be taking 1 hour because you're doing for the first time. So you exactly don't know what is to be done. You exactly don't know what formula is to be applied. You will take a lot of time. But then as and when you do it for the second time, revision that we say, then what will happen? You may be able to do it in 45 minutes. The same sum for which you took 1 hour, you may take 45 minutes. Why? Because now you know exactly which formula is to be applied and how to go ahead. But still, full scope is that is still full improvement is not done. You still have a further better scope. So if you do it again one more time, what will happen? Then at that time you may feel that you can do the sum in half an hour. So that is how our speed increases. That is why we say, na, in exam just don't do one time, because that is only the first time. If you do, or you do revision, then in exam you will be able to do fast, because of the learning effect, you have acquired the required skills, and hence you will be able to finish your paper in time. Otherwise, you'll be taking 1 hour for one problem and things will be difficult, correct? That is where learning curve helps companies to find out what is this impact of learning. Because of this learning, how much is the productivity increase and how much is the cost decrease. So what is learning curve? A measure of the experience gained in production of an article by an individual or an organization. So we measure how much experience they give. That is why they always say, na, experience counts. Why experience counts? Because with experience, you learn many new things. First time when you do is different. If the same thing you repeatedly do, you are always better off. Why? Because it's a normal human characteristics. With repeated operations, there are definitely improvement in performance. Your performance will improve. After few units, what will happen? You gain confidence. You know that, okay, I can do this. I will be able to do this. Your errors will reduce. Then you know where you were making problems. Where was the mistake? What I didn't do correctly. You will try and change it. So again, there what will happen? You will avoid those mistakes. Then as and when you grow ahead, as and when you learn certain things, then you will try to do shortcuts. You will learn new methods of doing a job. Then better equipments and tools may be applicable. Even in your calculators, you all know you can use your calculators most efficiently in many cases. So when you are using it new, you don't know how to make it or how to use it efficiently. Once you are, conversant with your calculator, the amount of operations you can do with it improves. Same is your experience with your mobiles. Your mobiles, so many applications are there. When you're using it for the first time, it's very difficult. Once you're conversant, you don't even need to see. You can do it very fast. That is the learning effect. So learning curve basically says, or learning curve basically is a measure of the experience gained in production of an article by an individual or organization. So what happens as and when a person learns, his productivity increases, the time taken by him reduces, and the overall cost reduces. That is why we say that with learning, or as we say, learning or experience is very important for improved performance. Okay. Next part, what we will see is we have our study note, standard costing and uniform costing. Our last study note of second last study note of your section A, okay, which is standard costing and uniform costing and interfirm comparison. I don't think we will be able to cover standard costing today, but we will be able to cover uniform costing and interfirm comparison part of it, which we will do today. Now, uniform costing. See, you have been doing various methods of costing. If you remember your process costing, contract costing, method of costing means the manner in which you are going to do or finding out your cost. Now, what is uniform costing? Uniform costing is not a different method of costing. It's not like process costing, contract costing, job costing. No. Uniform costing is not a separate method of costing, but uniform costing means applying same principles and procedures by various firms in the industry, in the same industry. You all know in schools we say they have uniform. What is uniform? Similar dress worn by everybody, that is uniform. Same way here, uniform costing means similar or same costing principles and practices applied by all the firms in the industry. That is called as uniform costing. Now for uniform costing, what is the advantage? Why this uniform costing? Uniform costing has various advantages. One and major advantage is interfirm comparison. That I will come later, because as I said that this part is uniform costing and interfirm comparison. So after discussing other advantages, we will shift to interfirm comparison. So what happens? Uniform costing, you have a common selling price, correct? Because if I have a same method of accounting, like as you all know that depreciation, if I account, every company has different methods of accounting for depreciation, then the cost will be different, right? But if two or more firms decide that we will have same method of depreciation, we have same method of charging overhead cost, we have same method of charging or giving incentives to our workers, incentive schemes, what you have learned in age 1, then what will happen? The methodology of showing your cost will be same, and hence it becomes very easier to fix a common selling price because we are in line in all our methods of costing. Plus government will also, government or government bodies or research bodies, they have much more confidence. If a same pharma company, one pharma company says that my our cost of making one medicine is 100, same medicine if the other company says no, no, not 100, our cost of making is 120. And you all know in pharma company, government many times has restrictions on the price, right? So if different people tell different cost, then what will happen? Government will not be they will not have a confidence as to which cost is correct. They are fixing minimum cost in many times, so they may feel that some members are cheating or whatever. It may be because of different methods of costing. So uniform costing helps here. Same method of cost accounting used helps government to fix prices, helps researchers. Benefits of research will go from big companies to small companies because everyone is doing same thing. As you know, when you wear a uniform, what happens? There is no problem of someone is doing good, someone is doing bad and all that. Cutthroat competition or unhealthy competition is not there. Healthy competition will be there, but unhealthy competition, that is giving different prices or window dressing as we all call it, showing wrong accounts or different accounts, all that thing is avoided. Then you as a common unit, industry as a common unit, can get services of its consultants and experts. It becomes easier to fix minimum wages and low labor turnover. What is labor turnover? Your employees leaving the organization and joining somewhere else. That is the change of people from one organization to another organization. Why this happens? One of the major reason is your income or salary. So if salary and incentive schemes, if both these companies decide or if two or more firms decide that our method of valuation of giving incentive, fixing of incentive schemes is similar, then what happens? Labor turnover on that point is avoided. So uniform costing has all these advantages, which has made uniform costing a tool, you can say, or application. Okay, which has made uniform costing very much acceptable by the industry. Okay, now in uniform costing you have one part which is called as uniform cost manual. This is another important thing which is asked in theory part at times. What is uniform cost manual? Okay, so uniform cost manual means it's a manual which has guidelines, instructions, clarifications, rules, everything regarding your cost, how the cost should be determined, how it should be analyzed, what should be the control part. Now, why is this uniform cost manual maintained? You all know manual is a booklet giving all instructions, booklet giving us all suggestions or giving us all the various information required. We also get manuals in our consumer goods. TV ka manual, fridge ka manual. Why you need that? You don't know how it is to be done? We know how TV is to be put on, switched off and all that. But why manual is there? Because there are so many other things which can be done by a particular product, which you and me will not know sitting here. And hence, every product requires a manual so that people can see exactly the functioning of the product and thereby make maximum use of what they have taken. Same way, uniform costing each and every firm should know. So the lack of communication and other things should be avoided. How can that be done? That can be done by referring to the manual. Manual gives you proper idea as to what is to be done, how it is to be done, what are the cost, how analysis is going to be done, how are we going to control cost, and so on and so forth. So uniform cost manual is, you can say, a booklet which contains full information on uniform costing. And the next term which you have here is interfirm comparison. Now, as I said here, I showed you here that one of the advantage of uniform costing is it aids in interfirm comparison. So now what is this? Okay, what is this interfirm comparison? It is a method of evaluating or comparison between two or more firms of the same industry. See now, if you want to improve on anything, then you need to compare yourself. When can you compare yourself? When you are having similar type, or you can compare with someone with uniform ideas or uniform operations. uh, in a simple words, I can put it. Suppose I say that you are doing ICW exam, okay, and you have a friend who is doing CA exam. You cannot compare saying I got less or she got less, and hence you know how we can improve and all that, because the methods of examination may be different, the portion may be different, the paper patterns may be different, the difficulty levels may be different, right? But if now you all friends, you all are giving CMA exam. So now when you are giving CMA exam on the same day for the same portion, then you can say that yes, she got 180 and I got 60. So somewhere I have not done correct. Then you can use it in a healthy manner by finding out where you have gone wrong, why you have done wrong, and hence you can improve in your next exam. So that is interfirm comparison. Comparison between two or more firms of the same industry to ensure that they know their strengths and weaknesses, and thereby they help you to improve on your performances and reduce your weakness. That is the basic thing of interfirm comparison. And for this, what is necessary? Uniform costing. Because as I said, what is uniform costing? Uniform practices and principles. You can compare yourself with another CMA, not with CA or CS, because that exam pattern, paper, difficulty level, everything is different. Correct? Now, what are the advantages of this comparison? We say always किसी के साथ compare नहीं करने का, but healthy comparison is always very good. Why? Because only when you compare yourself with the standard, then you know of your strengths and weaknesses. If you don't compare, only you will not know how to improve. Your improvement will take place only when you know exactly where you're going wrong and what are your strengths, where you score more, where you score less, and hence you can improve on your performance to have better advantage in the industry. Second, when you have interfirm comparison, information is available. If you see any business person, he always wants to know what his competitors are doing, what is the industry, where we can do, what is the market, so many other things. So what happens when you try to do this comparison? At that time you will know exactly what is going on in the market, because that is where you will try to go and find out the information. So that is where it helps you to get the information about the industry. Then it helps to develop cost consciousness among the members, because if my neighbor is doing or my co-business person is doing at 100 rupees, why my business is taking 120 rupees? So I am doing something in an inefficient manner. There may be scope for me to improve. By knowing this, what I can do? I can ensure that I make or I see what are the various ways in which I can reduce my cost, thereby saying that the cost will be reduced and I get my available profit. Then increase productivity and standardization of product. You know, when you try to keep on improving on everything, definitely productivity will be increased and standardization of products will help people to get or to be more effective, learning effect, as we said, it is more and more in that. So this is how your uniform costing and interfirm comparison help management to ensure that they reduce cost, they try to be market effective, and by analyzing their strengths and weaknesses, they continuously try to improve upon their productivity. Okay, so this is regarding interfirm comparison and uniform costing. Have you all understood this? Did you all understand all this? Okay, did you all understand this? This generally will come mostly for your theory part only. Is this understood or no? Yes? Have you all understood? Okay, fine. Uh, See friends, so important thing of today what you have to remember is once you go today home from once we exit from our part, what we will be required to do, we will be required to ensure that for tomorrow you all already have the notes or questions which I'll be giving, because we will be solving notes. Just like today we saw how or what is the important concept in every particular chapter and how it is to be applied in practical problems. Same way tomorrow we will see how a particular concept and problem, and I will be sending the notes. So please see to it that tomorrow before we come for the class you have the notes handy with you, your calculators and your notebooks handy with you, because we will be solving the in class. That is one. Second, I want you to be out of tension now, having known your paper pattern. Now you know your paper pattern will remain the same. Offline, online, studying method doesn't differ. Only thing what differs, your method of presentation, which you yourself did. We did one problem where you yourself could answer. So you know that is exactly how you will be able to do it in the exam. So don't take any tension, because as I always say, our subject is very easy, very important, very interesting, but you need to put in hard work, and then you will come with flying colors. You will tell me next time, ma'am, this was a very nice exam. Online has much more benefits than your offline. Okay. um Fine. Anyone has any doubts? Did you all understand what we all did today? So if we have time, I can if no one has any doubts, I can show you one example on budgeting. Does anyone has any doubts? Did you all understand everything? Enjoy the session? Okay, then example on learning curve I don't have right now with me. Maybe if time permits, tomorrow or on the last day, I will definitely take. Learning curve sums. See, what I have basically done is the place where concepts are required, more concepts are required, we have taken sums on that. So I have not taken sums on everything, just like we have not taken sums on uniform costing. Some sums are there, but they are not as important, because if you know now entire thing is there, what is there, entire FM is remaining, and you know how vast it is, right? So we may be required to do, and for that also concepts are so very too many formulas and too many things to be learned in that, and hence we cannot take problem on each and every topic. What I will be doing is I'll be taking problems on few important topics, because then what will happen is you will understand basically what is to be done. Once you understand the concept, then you all will be able to do it on your own. I'll keep this in mind regarding your learning curve. If we get time, we can ask. See, generally what happens, learning curve, they ask you at times in exam. I know, because one or the other they keep on asking something and else, but marginal costing generally they ask, standard costing generally they ask. You will know the importance. If you all have the scanner, you will know each topic, which topic is given more importance and all that. right? So that is where problems on each topic I have not taken. Now tomorrow also, it is so vast, your FM, that I may not be able to do problems on everything. Like for example, your cash flow statement and all. It is so vast, and taking problem may be difficult. In some of the cases, what I may do is I will show you the questions as well as answer, and I'll explain to you. We can do that in some of the cases. Okay. Okay, fine. If you all have no doubts, I can take or show you one problem on, you can say, cash budget. See, cash budget. I have question as well as solution. I'll just show you all here. We will not solve it here, but we will solve it. Means I'll just show you orally, because most of the cash budgeting problems, if you understand the concept as to how they are applied. See, a company normally collects cash from credit customers as follows. This is something which you can get in your first question. That is, you all know, initially you all have uh, objective questions, say true or false, match the column, choose among the alternatives. In such type of problems, you can also get this type of problem. So I have just taken one, so you understand that it is not just theory, but it is also, you can say, practical question which they ask in your MCQ, first MCQs. So just see here, a company normally collects cash from credit customers as follows: 50% in the month of sales, 30% in the first month after sales. You need not write, you just understand the pattern, so that you will know exactly how we go about in this type of problem. Because cash budget, always the problem is in that type only. We go in that pattern only. Most of the pattern, this month, next month pattern is similar. Say 50% in the month of sales, 30% in the first month after sales, 18% in the second month after sales, and 2% are never collected. Means 2% are bad debts. What does this mean? If sales all on credit are expected to be as follows. So these are the sales in the month of Jan, Feb, March, April. What have they said? How is collection done? 50% in the month of sales. That means if I sell in the month of Jan, I get 50% of this in the month of Jan itself. 30% in the first month after sale. So 30% of the sales I will get in Feb, and 18% in the second month after sale. So 18% I will get in March. You all are getting me? 50%, if I sell in the month of Jan, 50% I get in the same month, that is Jan itself. 30% in the first month after sale, that is in Feb. 18% in the second month after sale, that is March. So Jan ka sale kaisa aega? 50%, 30%, 18%. Same will be for every month. Okay, let us see the solution I have given here. Calculate the amount of cash expected to be received from customers during the month of March and April. Okay, so cash budget. Like I said, your cash budget will always be in this way. See, you have Jan. Jan sales was given 5 lakh. You will remember what was the pattern: 50%, 30%, 18%, 2% was bad debts. So if I sell in the month of Jan 5 lakhs, what happens? In the month of Jan itself, I get 50%. In the month of Feb, I get 30%. In the month of March, I get 18%. 5 lakh ka 50%, 30%, 18%. April I don't get anything. In the month of Feb, my sales was 6 lakhs. So how do I get 6 lakh ka 50% same month? That is Feb ka sale same month. Feb 50%, 30%, 18%. मार्च में 50%, अप्रैल में 18%, 30%, May में 18%. We don't need to show May because the question was sales cash collection in the month of March and cash collection in the month of April. Correct? So March you get 50% in March, 30% in April. Then for the month of April, 50% same month. Correct? And this is what total of collections in March and total of collections in April and March. Okay. So whenever you have a cash budget, in cash budget, always the collections, if you have done, you know, this is half this month, half next month, 1/4 this month, 1/4 that month. That is the way they show. So whenever cash budget comes, remember this month how much, next month how much, and so on. This will be the general pattern. Okay. Anything else you all will want to ask for today? Okay, someone is asking where are the notes shared. Notes are shared on your email. Notes are shared on your email. Yes, someone is saying key factor questions from marginal costing would be helpful. Yeah, I agree with you. Key factor is also important, but those sums right now, we took two sums where you could understand the concept and where you could understand online and offline difference. So as we say, your time is less. If we get time, I will show you how we do in key factor. That if there's a limiting factor, how we go for product mix, because these problems are very big. You know, if one problem of marginal costing explanation itself will take more than 40 minutes, which will not be what we can do now, because we have to do financial management also. If you have specific question as to what is to be done in marginal costing, key factor and all that, I can definitely help you. Notes are shared in your email ID. Any other questions? Okay, fine. This I will keep in mind regarding your, there's only question of some, ma'am, there's only questions of some available, not PPT. Yeah, because PPT, I have not made any such PPT and all that. All this is where, you know, we are solving problems. Main important is your problems which we solve, and other things are there what are already there with you in your textbook. So that I have not solved. Like for example, if we do ratio analysis tomorrow, then it is important that ratio analysis you all get ratios all put together. So I have shared that with you all. Now today, as far as what we did, for example, your marginal costing, all formulas are directly and easily available in your books. So there's no need for us to, you know, share again the PPT or anything. Ratio analysis is such where there are vast ratios, so that maybe I'll share with you all that thing. Or another important thing is, as I said, in your cash budget, some important part of the question. If something like that is there, I'll definitely share with you. One question on limiting factor. Is this pattern applicable to all subjects you have asked? Now, I'm not really sure, but it may be. But I think it is always better you check with your concerned professor. You all are having revision lecture with everyone, right? So it's better that for each subject you check with the respective professor, because I have not seen papers of all the subjects. As in the paper pattern of our subject. So I can say this for cost and management accounting for sure. For other papers, it may be, but better to check with the respective professor. Yes, overheads and all we are going to do tomorrow. Today we have not started with standard costing. Tomorrow we are going to do start with standard costing. At that time we will be doing all overheads. Variable overheads, you mean to say here when we said variable cost and fixed cost, if that is the question you're asking, I can say variable cost is okay. So someone is asking, can you give us the short notes? Now, let me tell you one thing. You'll have to come out of this college phenomena where students keep on asking, ki, ma'am, give us, question bank, and we will please give us question bank so that we can learn from the question bank and we go ahead. Please, students, come out of that. This is a professional exam. It is not that you learn only what is given in the question bank. Ma'am, question answer they do and we do. No, please don't do that, because today we can give you question answer. If we give you question answer, tomorrow when you go in your real life, what will help you is not the question answers I'll be giving you today, but what will help you is the understanding that you will grasp today, right? Just writing question answers and getting through in the exam is not for professionals, because tomorrow you'll be doing cost audit. For cost audit, who will give you question answers, who will give you papers? So when you're attempting your professional exams, don't go by the fact that question de do, answer de do. That is not the way we can learn professional exam. For professional exam, actually you are required to learn you are required to refer various books for each subject. You are required to actually be thorough in each subject, not this question and this answer. Audit kaise kar paoge alag alag question ke? You got me? So no questions and no this can be given. You have to go through the, as we say, your study material. Having gone through the study material, you have other reference books. Actually, a professional study aims that you know your subject, where you will have to go to the particular reference books, refer from there if you have any doubts, and refer to your professors definitely if you have a doubt in a particular thing, not that question or answer they do. No, I'm completely against that, and that is in your interest, mind you, because it's not at all helpful to you tomorrow when you go out in the market, job market. Yes, standard costing, which you were asking, standard costing we are starting tomorrow. So tomorrow we start with standard costing, one part, last part, which is remaining in our first section A. Section A major part remaining is standard costing. So we will see the standard costing tomorrow. That time maybe we will do examples also, and come on time so that the basic part what I explained initially you don't miss out, because sometimes what happens, the concept if we explain initially and you miss out that, then later on while seeing the problem it might become difficult. So standard costing definitely we are doing tomorrow. We are starting tomorrow with standard costing, and that time I'll explain you both these concepts. Okay, anything else? Manzari, fine, should we stop? Okay,
Yes,
Manzari sir,
yes, madam.
we'll stop. Okay friends, so see you all tomorrow with proper question with you all. As we said, your questions will be given to you. If you all don't get it, please refer to the institute. They will just send it to you again, right? Okay, all the best. Start studying tomorrow. We'll see you again at 2 o'clock. Bye bye.
Bye, madam. Thank you.
Yeah, thank you sir. Thank you Manzari sir.
Thank you, madam.
I'll exit now. Leave meeting.
Yes, yes.